Hi, this is Stuart Weems and welcome to the Investopoly podcast. My goal is to give you simple, easy to understand strategies, insights and tips to help you master the game of building wealth. And in this episode, I'd like to talk about the Perth property market and put to you that it might be the next market that's about to explode into a bit of a growth cycle. Despite bearish property forecasts over the past couple of years, capital city markets obviously have proven to be pretty resilient, and I note last week Westpac joined the other big banks by revising its property growth forecasts higher to 7% for the 2023 calendar year, and most of the other banks kind of that same level. And while most capital cities have experienced pretty good growth over the last 10 to 15 years, Perth is definitely the outlier. Its median house price has only appreciated by 1.2% per annum over the last 15 years, according to data from the Real Estate Institute of Australia. That is less than inflation. So in real terms, house prices have fallen, or at least median house prices have fallen in Perth. But I put to you that perhaps this is going to turn around. And I've shared a chart through this podcast previously. Of course, the link is in the show notes because I've updated it for recent data. Anyway, this chart looks at property price growth over the last 4 decades and demonstrates that in most markets, there are 2 distinct cycles. There's a growth cycle and a flat cycle. And the combination of these cycles over very long periods of time results in an average compounding capital growth rate over the last 40 plus years, about 7.5%. And so what we find is that after we go through a flat cycle, we go through a growth cycle, and that growth cycle tends to generate or deliver compounding capital growth at a much higher rate than the average rate. And this is called mean reversion. Mean reversion means that after a period of below average growth, or with respect to property markets, it tends to be very low growth, are followed by periods of above average growth. And actually put a table together in the blog on the website, so you can certainly have a look at that. And what I did is had a look at what is the subsequent growth after flat cycles that we've seen. So let me give you a few examples, although I'd encourage you to have a look at the table yourself. But between 1989 and 1996, that 7-year period in Sydney, they had virtually zero growth. The subsequent 7 years after 1996, almost 14% growth. In Melbourne, between 1990 and 1996, that was the recession we had to have. So that 6-year period, just over 1% growth. Subsequent 20 years was 8.4%. In Brisbane, between 91 and 2000, that 9-year period, about 2.8% growth. The subsequent 8 years was 12.5%. Sydney again between 2005 and 2012, 1.4% growth. The subsequent 5 years, 14% growth. And so as I said, but Perth over the last 15 or so years has been very flat. And so the question then is, what is the subsequent growth going to be? Well, when you look at that data, that historic data, it's suggesting that the growth over the next 5 to 10 years could be certainly in double digits. And that would be enough to see median prices double over that sort of period of time. Now, the longer the flat period lasts for, the higher probability that the growth period, the subsequent growth period, will last for longer, or if it's shorter, will be more pronounced. So there is that strong trend of mean reversion, and we can, I've talked about it a number of times in this podcast, we can invest assuming that mean reversion will kick in. What we don't know is when it will kick in. You know, the Perth market might actually continue to go sideways for another 5 years. What we do know is with every subsequent year that passes, the probability that we're closer to a growth cycle is higher and higher. So I wanted to talk about some pros and cons of investing in Perth. Obviously, the most obvious one, which I'll talk about in a second, is just the size of the capital city. It's a lot smaller than Melbourne and Sydney. But let's talk about a couple of positives, and then we'll talk about a couple of negatives or risk considerations you need to think about if you're contemplating investing in property in Perth. Firstly, high rental yields and a really tight rental market. Arguably, Perth has the tightest rental market in Australia. Its vacancy rate is only 0.6%, which is certainly an all-time low. And of course, there is a well-documented rental crisis in Australia at the moment. And so most capital city markets are tight and tightening. And rising rental yields are often an indicator the market will soon go through a growth cycle. And the reason for that is simple. Higher rental yields make investing in property more affordable, especially if and when interest rates reduce in the future. And also it reduces the risk of investing in property as well, because if I'm banking a gross rental yield of, let's say, 5%, then I only really need another 5% in capital growth to generate a total return of 10%. Whereas if my rental yield is really low, then I am very much relying on future capital growth from that particular asset to justify its investment. So as I discussed earlier this year, the only way to solve the rental crisis is to really attract more private investors into the market. Look, I think governments will probably play around with a few stupid ideas first, like rent caps and probably force more landlords out of the market before they eventually realize, hey, we need more private investors and we need to get them back into the market. Meanwhile, rental yields are just going to increase, I think, and it'll just become a bigger and bigger problem. But at some point, most investors are going to turn around and go, well, it's pretty attractive to invest in property despite the fact that the government keeps interfering and changing tenancy laws and so forth. So I came across this property that sold in Mount Lawley in Perth in July this year. Mount Lawley is a blue chip suburb about 4 k's away from Perth CBD. This property was a solid 3-bed, 2-bath family home on 880 square metres of land in a really quiet street. Now, Mount Lawley is a great suburb, as I've said. It sold for $1.15 million and is currently being advertised for rent for $820 a week, which equates to a 3.7% gross rental yield. Now, to get a rental yield above 3% for a property that's 4 k's away from the CBD on a really big block of land, really anywhere else in Australia would be a struggle. I mean, you might get close to doing that in Brisbane. Brisbane rental yields are pretty attractive as well, but it is, and I think it probably is good evidence that the value of that asset is intrinsically undervalued. Because really, if you're buying an asset that's mostly land value or predominantly land value, typically it means you're going to get a lower rental yield. And so it's really strange to find this sort of situation where you're getting such a high rental yield. And that's your starting point. So really, the longer you hold the asset, the better off you'll be in terms of overall yield compared to purchase price. Now, when I look at this property and think about what's the probability of it being worth, say, $2 million in 10 years, I think it's a bit of a no-brainer. I think that looks like, to me, a really great and attractive investment. The next positive is Perth's projected population growth. So its projected population is expected to grow from 2.2 million in 2022, so that's last year's population, to over 2.6 million by 2033, so just in about 10 years, which is a growth rate of 1.3%, which is really the third fastest rate behind Melbourne and Darwin. So, of course, there's been a major influx of overseas immigration probably since that forecast was put together by the government. So, of course, the population could end up being higher than that. And whilst Perth is the 4th largest capital city population-wise, its higher growth rate should certainly stimulate demand for property. So let's talk about a couple of the negatives or risk factors associated with investing in Perth. And the first and most obvious one is its industry concentration risk. You look back at Perth's previous growth cycle, which was between 2002 and 2010, was in a large part stimulated by the mining boom. The mining and energy companies are very large employers in Perth, and that means that the property market is susceptible to a downturn in mining. Apart from the large energy companies, and there's about 14 of the largest international energy companies have offices in Perth, most corporate head offices located in the eastern capital cities, particularly in Melbourne and Sydney. And those head offices attract, very large salaried employees. So if you're looking for a head of position in any sort of listed company, for example, you're most likely going to find that employment in Melbourne and Sydney. And so by attracting people that earn well above average incomes, certainly helps those property markets. I've talked about population, but that is a potential negative downside as well. The larger the population you have, the more diverse set of demand factors that you get to benefit from, particularly with respect to property markets. Again, having that sort of concentration risk isn't so great. Melbourne and Sydney have more than 5 million people, Brisbane 2.6 million plus. So there are bigger cities and they do have more diverse demand factors. The distance and isolation factor, being a different time zone, there's some pros and cons, I guess, with that. But if people are going to benefit, or if capital cities are going to benefit from interstate migration, it's much easier for people to say, look, I'm going to leave Sydney and go to Brisbane, because the same time zone, proximity, the distance, it's still a plane flight, but it's not as long a plane flight, say, from Sydney to Perth. That tyranny of distance really does, I think, reduce the possibility of increasing interstate migration. Having said all that, I think Perth probably, at least in my opinion, has the best weather in Australia. And also, if you're an overseas immigrant, its housing market is relatively affordable compared to eastern capital cities. So it does have that going for it as well. Now, Perth wouldn't necessarily be my first choice in terms of investment location. If I met a client that didn't already have a property investment, I would typically say stick to the larger capital city markets first and use those capital city markets to start building your wealth, because they're lower risk and higher probability of generating better returns. However, if you already have exposure to other capital city markets, well, I think Perth has a lot of merit because it's likely to enjoy a really strong growth cycle. And remember, all you need from a property investment is more than 7.2%. 7.2% will mean, on average, over the long run, your property value will double. So if you buy a property for $1 million today, in 20 years, that'll be worth $4 million, and you've accumulated $3 million of equity. $3 million equity in 20 years' time won't be worth $3 million today, of course, but it'll still be a whole lot of money and go to a very long way to helping people achieve their retirement and lifestyle goals. Now, I'm not just pro-Perth. I think other capital city markets also are well primed to generate really good growth over the next couple of decades. And I would remind you that Melbourne and Sydney's growth rate over the last 5 years has been well below average. And we know, again, mean reversion means that periods of below average growth are typically followed by periods above average growth. So Melbourne over the last 6 years, has generated 2.5% growth, and Sydney 3.8% growth. And remember, the longer term average is close to 7.5% to 8%. So well below average, which means certainly that Melbourne and Sydney aren't unattractive markets either. Anyway, if you're thinking about investing in property and you're comfortable to accept a slightly higher risk by investing in a capital city that's smaller and has more demand concentration than the other larger capital cities, I think you'd be well placed to consider Perth. All right, that's it for this week. Until next week, bye for now.